Everyone trades the MACD crossover and everyone complains it's slow. But the crossover was never the real signal, the histogram is. As a swing trader, reading the histogram is how you anticipate a turn instead of reacting to it late. Let me build MACD from scratch and show you the part that matters. Here's the anatomy. The MACD line is a fast 12-period EMA minus a slow 26-period EMA, a clean read on momentum. The signal line is a 9-period average of that MACD line, and the histogram is simply the gap between the two. When the MACD line is above its signal, momentum is positive, and the histogram sits above zero. When it crosses below, momentum has turned negative. Those 12, 26, and 9 settings are the defaults for a reason. They balance responsiveness against noise across most swing time frames. But the concept matters more than the numbers. 3 parts, 1 story, how fast momentum is shifting. Now watch the histogram as momentum stalls. The bars start shrinking well before the MACD line actually crosses its signal. That shrinkage is your early warning. By the time the crossover fires, the histogram already told you it was coming, so the crowd waiting for the cross gives back the first best part of the move. So here's the key. The crossover is confirmation, the histogram is anticipation. React only to crossovers and you're always a step behind. Ride the histogram and you front-run the signal the whole crowd is waiting for. Mac's second superpower is divergence. When price grinds out a higher high but the histogram makes a lower high, the trend is losing its engine. The second push had less force behind it than the first, even though price went higher. It doesn't mean short instantly, because divergence can persist. It means the fuel is running low and you should tighten stops and watch for a trigger. The highest quality version shows up at a key level. Price hits resistance, makes a marginal new high, and the histogram clearly diverges. Combine that divergence with a break of short-term structure and you've got a reversal setup with a tight, logical stop and room to run. And the trap, because it's brutal. MACD is a trend tool. Drop it into a sideways, choppy market and it fires crossover after crossover, everyone a fake out. Only take MACD signals when the higher time frame trend agrees. That single filter throws out most of the losers. On real price, you can see both halves at work. The histogram fading ahead of each turn, and the crossover confirming it a few bars later. Notice how the cleanest signals come when MACD agrees with the trend, bullish crosses in an uptrend run, while the same cross in a choppy stretch just whipsaws. That's the practical workflow. Read the histogram for the early heads up, wait for the cross or a structure break to confirm, and only act when the higher time frame trend is on your side. Used that way, with the trend behind you, MACD becomes one of the cleanest momentum reads you have. Place it correctly. MACD is the momentum layer of the Confluence Method. It confirms force behind a move, but it's not a standalone system. Stack it with structure, a key level, and a trigger, and the histogram fade becomes a genuine edge instead of a lonely indicator. So ACD is 2 EMAs and a histogram. The histogram leads the crossover, divergence warns when the trend's engine fades, and it ties in a range, so filter it with the trend. Use it as your momentum layer, never alone. Subscribe for the full method and trade your own plan. Education, not financial advice.